Okay, so what's happening? Good morning. Today's Monday morning, and there is one key thing that I've been using, and it has been helping. I remember back then when I was trading Euro USD and GBP USD as my only pair. So most of the times, if I take a position, and I've seen analysts like those we are in the same academy who take a counter position against my own. I'll be like, the chart pattern is promising to be down or up, but they'll be saying that's not DXY is saying, and they take position that is contrary to my own, and at the end of the day I'll get stopped out early and their own position will make profits and I'll end up in loss. So that is something that I do realize while trading Euro USDs, GBP USDs, AD USDs, any currency that has the US dollar attached to it. There is few things that I do understand. That is why I want to explain to you in this video. So basically, anybody that is trading the USD pair should understand that DXY is a key factor in taking any single position that you do. So let me show you what I mean. Now look at Euro USD. Look at how the price is coming down, and look at DXY. Look at, Euro USD, the price is going up on Euro USD, and if you look at DXY, how the price is coming down. So one of the things that you understand and is vital in your trading journey is that Euro USD and DXY move in opposite direction. So let's say, for example, you are looking for buys in your Euro USD. What you should be aware is that this should be counteracting the movement. The DXY should be counteracting the movement in your analysis. So when DXY is buying, Euro USD is selling. When Euro USD is selling, DXY is buying. That is what I want to let you know. So if you go to the higher time frame, the reason why the market is not looking structure, it's not giving structure, because today is morning and Monday morning, and of course it's not every Monday morning that the market is not giving any form of structure, but we can still excuse the day because it's Monday. It has been weekend and there has been a slippage, so the market will try to cover up the slippage before continue trading. I know people that do trade the slippage, that what basically they do is that if they notice there's a slippage in the gap, what they do is that they already start selling, because definitely the market has to come and fill this slippage before it continue moving. So the knowledge today I'm bringing to you is that whenever you're trading a USD pair, especially that is the code currency, is that they move in opposite direction. That is what I want you to know. So let's look at USD now. For example, the 15-minute time frame, we have one candle, two candle, three candle are selling, and if you look at DXY, we have the same thing. We have one candle, two candle, three candle that are already selling. So when you have analysis, when you have a chart pattern, smaller time frame is not giving meaning. Let's go to higher time frame and see what you're talking about. So what the higher time frame was saying is that we're looking for continuation of the sales in the Euro USD, in the DXY. And if you look at the Euro USD, is that okay, market have been selling, has been buying, trend is up, the market just dropped for retracement, and the market will eventually continue buying. So that is what the Euro USD is saying. As you all know, we have the market movement as is our lowest point. We have a higher high, higher low, higher high, higher low, higher high, have a higher low, that's of liquidity, have higher high, higher low. high, higher high, higher low, higher high, higher low. So Euro USD has been giving us uptrend, and if you look at DXY, it has been giving us downtrend. So whenever you're looking up to take position, what you should check out is the zones on the DXY. I clean it up because it's Monday. I'm expecting to start having new mappings. That is what I do. But from psychological levels, you can start. From psychological levels, you can start. Take your psychological levels on DXY and take your psychological levels on Euro USD. So I'll have another video on how to trade using psychological levels. So you take your psychological levels on the DXY and you take your psychological levels also on the Euro USD and you trade with it. It will help you to help your positions in taking positions. So psychological level is really important. It's one of our confirmation keys. So if you notice, most of the times the market reverses at exactly on the psychological levels, because psychological levels help to determine market price and turning point. So example, something like this, if you have your psychological levels outlined like this, you know that okay, this market, there is tendency that the market may reverse at this point. So when you're looking at taking your trade on Euro USD, you know that okay, there is tendency that the market may also reverse at this point. So if you are going to take psychological levels on the Euro USD, let's look at something like this. Let's check what level is going to give us. So these are all forms of confirmation while trading, but this is not the complete breakdown. I'm just going a little bit. So while trading, and if you look at okay, DXY is also reversing at the psychological level. Euro USD is also reversing at the psychological level. You can use that as confirmation to take your trade. You can see how psychological levels is important around these zones. You can see how psychological levels can help you. So that is the thing that I want to bring to you, is that whenever you are trading the USD pairs, pay attention to the DXY, because what you don't see in the pairs, the DXY may explain it to you very clearly, and what you don't see while analyzing your pair, if you still check out the DXY will also explain to you more further. So if you like this video and if you want to encourage me dropping more content, please like and subscribe on this channel. Tell us how you feel about this video. Thank you.